So that's going to be a backtesting video. So today morning, I actually tried to backtest it. Like I was taking a video, but I forgot to actually just share my screen. So I'm gonna have to do it all over again. Yay. Okay, I cannot actually do it anymore again. So now I'll just explain. So we are inside 15-minute imbalance and also 50% of that whole range. And yeah, so basically what I want to see is that I want to see a sweep above this low, which happened right here, the market. And I want to like actually, I want the price to actually come back down to 50% and then test that zone and then give me a reversal pattern, something like this. So market open right there. So yeah, we got tagged in after this final inversion and big structure. Change the delivery inversion and then 3 minute inversion on top of it. We also found a 1 minute fair value gap and then yeah, basically that's an A plus setup. So we can actually target one this to this zone. Well, we should actually target the safest first liquidity zone, so which happened here. And this is where you go break even. So basically, yeah, that's it. Pretty nice trade. That's a clean 1:1 1.85. And I actually did trade. I mean, didn't trade morning sessions this week. I mean, previous this week, yeah. So I just wanted to know how the price is actually moving. So what happened here? We stepped out the high, but that's an SMT over there. We still actually sweep that high. So that's what the reason why we marked it. So on top of it, we have a 15-minute fair value gap and 1 minute motion, 5 minute motion. So that confirms the trade to be an A plus and all. So that's a chain of state delivery. So which is pretty cool. They got tagged in after that inversion, and then you go break even at the break of close, and then boom, it's your take profit. Why the reason why I actually target this is because this is premium, this is discount zone, fair value gap, and also we are this is an impulse move, so which the price can actually respect the zone and then go up. So might actually also break the uh, thing because we also creating multiple chain state deliveries, which is higher, lower highs. So basically, that's the reason why I target this 1 minute fair value gap. So that's right. Yeah. Now we got nothing after that. Basically, you don't get stopped out, break even. So somewhere on the so now I was expecting the price to come back down till here. That was the initial goal, but this buy entry is just a pullback to sweep out the inefficiency, I mean, sweep out the liquidity and rebalance the inefficiency. So yeah, we got a buy entry, but the whole model for the day is to be bearish. So that's what happened the rest of the day. Boom. So yeah, pretty nice, right? So let's go to the next thing. now we're pushing down. So we got two components in order for the price to go up. And in order for the price to go up, it has to sweep the sell side liquidity. In order for the price to go down, it has to sweep the buy side liquidity and sell side. So basically, when you go to the lower time frames, you might probably understand a little bit more. So right here, we invest the fair value gap, invest the fair value gap, invest the back. So which means price is actually going to be bearish. So we invest again one around here again, right here, and then another 5 minutes fair value gap being disrespect right here. And on top of it, we break the structure which happened right here. So we're going to be bearish for the day, right? So break fair value gap again, still respecting that fair value gap. And probably if we invest this fair value gap, then we can go lower. And also, if you go to 1 minute time frame, you can see much more clean. So I'm going to pick this as the recent liquidity. I mean the internal one because we are actually consolidating and also I don't know the exact reason how to explain this, but this could be look, imagine this 4 hour time frame. So what would you think? What would you think? This is going to be the recent liquidity that's the price has to speak. So that's in this case 1 minute time frame. So if you actually look into it, this is the most recent liquidity zone, the lower time frame. So which basically says that it's a balance zone. So let's see if we sweep this high and then we can go lower. Inversion right there again. Anytime market opens now. So yeah, market open. We leave out this low bit, so which says that the price is about to come back down and sweep that again. So we actually got the liquidity that has to be swept. And also this can also be a liquidity zone, so which is inside of inefficiency. So this is a bad gap right here. So now if we get an inversion for this candle, then we can go to a sell entry and target London low. So right here we got an option. So I'm gonna sell loss about this high, and then let's say I'm wait because we have a fair value gap right here. So which means the price should not actually close above the midpoint of that 5 minutes fair value gap. And if it happens, it's most probably gonna hit this high. So I'm gonna target London lows, stops going to be there. You might experience a little bit of drawdown, but it's for the good. So as I said, guys should not close above the 50% of that fair value gap. So which didn't happen. That's a nice thing. Like so reason for not going break even is because we don't have an imbalance right here. Take profit, take profit hit. So that's what I would have done if I was in the market. I mean, unfortunately, I was sleeping on those days, so my bad for that. I missed out a lot of opportunities to make profits last week. But eventually, it's gonna go up and then come back down. So I got two options right now. So one, Ferrari gap is still holding. Two, I want to see a sweep above this high in order for the price to go in. sweep out the London lows. So London lows has not been tested yet, and then Asian lows not been touched yet. So midnight open is also still intact. So let's see how this one plays out, right? That's it. Now you go to 1 minute chapter. So we invest to 15 minutes by again. Yeah. How about all that? 5 minutes. One of 5 minutes time frame. The reason why I'm going bearish is because, as I said, this fair value gap has been disrespected, and then we got a breakup structure. So if this fair value gap got disrespected, the price has to go and retest that. If it doesn't, it's gonna most probably go down. So if it actually sweep out that high, then most probably price come back down, retest that inversion, and then go up. So basically, this is what happens. So if the price inverse this, so inverse this fair value gap, and it has to sweep out this high. It's right here. So in order for the price to keep going up. So if it sweep that high, the price most probably going to come back down and retest that uh, inefficiency and then climb up to the liquidity zone. So that's one scenario. So basically, yeah. So that can be a possibility. So in this case, we have a base structure fair being respected. Everything is going to perish. Everything is going to perish. Everything going to be bearish. So we got another basic structure right here. And this could be the recent potential target that we can target, but also we are gonna have to keep this in mind that the price is inside what kind of bullish for that gap, which is exactly in the midpoint of that whole entire move. Swing. Now we go 1 minute time frame and then see if we got anything going. We don't have any inversion right here, so we just have to patiently wait. So 5 minutes got inversed right here. 5 minute candle got inversed. And on top of it, we have a clear market structure shift and a fibonacci gap. Basically, gonna sweep out the high. So as I said, as I was telling you, like if the price actually inversed, it has to actually sweep out the high of that inversion. So which happened right here. So which means the price is going to come back down to the inversion and then rebalance that, retest that inefficiency and then go up like the inversion or any sort of bullish fair value gap, or if it's going down, it's going to be bearish fair value gap. So yeah, it's a pretty nice method that I follow actually. But, but when I lose my control, I don't actually follow these kind of things. So yeah, something like that. Okay, okay. So this, as I said, so we invest the fair value gap, and it has to sweep out the most recent high of that fair value gap. So which is this three candle pattern. Actually, fair value is three candle pattern. So it has to sweep out the first candle that formed the fair value gap. So which happened right here, and then we boom come back down, retest that imbalance again. Inverse fair value gap again. And on top of it, if we have any sort of by opposite fair value gaps, that can be A plus setup. So which is right here, but that I won't actually be trading that. So I wouldn't have taken that. I was bearish and I keep being bearish because we didn't actually sweep out the slope. And also on top of it, we are being bearish from Monday. So that can happen. So that's the reason why you're gonna have to wait for the session highs to get swept down. So in this case, we didn't actually sweep the previous day's London session high yet. Let's see if we actually sweep out that high. Yeah, we did actually. So right now, I'm gonna mark out this whole move. The reason why I'm going to mark out this as a high because we didn't actually invest any sort of fair value. We are respecting bullish. So bullish fair value gaps being respected any time frame, 30 seconds, 15 minutes, 15 seconds. If we have a fair value gap, it's been respected right here. And again, right here. So this is the first fair value gap that got inversed. So that's the reason why I'm actually putting out the fib now. If even if I was in the live market, I would do this. So that's the reason. And again, as I said, swept out, came back in, retest that investment value gap, and it's gonna keep going down. It's gonna do its own way. I don't know. It can actually go pretty fast or can be slow, choppy right here. I have final inversion that I need to be looking at because we don't actually have any fair value gap in this zone. So that's pretty much a V-shaped recovery, by the way. So we also have a break structure, but we don't have any sort of inefficiency or any structure for the price to come back and retest and stuff like that. So that's the reason why I took this 1 minute for value gap. And also on top of it, if we go to the 5 minute time frame, we can see an inversion. So on top of it, we have another inversion. So in this case, price can actually come back down, sweep out this low, and then probably retest at 50% of that fair value gap and then go up. But I don't think so. In this case, it's not going to happen. So it's going to keep coming down. The reason because we have another fair value gap in the discount zone, probably price most likely come back down to the discount and then go up. So that can also be a reason after investing the 5 minutes fair value gap, we have one more lower time frame confirmation. So which is right here, price has to close below that 1 minute fair value gap. So which happened right here with momentum and being bearishness. So that's where I will enter. That's where I'm going to enter. The steps is going to be at this high. The reason because that's an order block, or I don't know exactly. Move. We gotta change the state. I mean, change the state of delivery. So that's where we can actually expect the price to respect. So like we expect the price to not actually go up to that high. And also on top of it, if we have to go up, this 1 minute fair value gap will inverse. So that's when we know by then like the price is gonna go up. And if it respects it, it's gonna come back down somewhere to this, as I said, the 5 minutes imbalance right here, which is in the discount zone. So it's 1% entry right here. And then stop loss take profit. It's going to be this low, maybe London low. Once if I get a single state delivery or anything like that, I might probably break even that trade. So we got first break of structure. We found in the, I mean, we actually sweep out the internals. And then this is going to be, if the price breaks this low, I might go by here. Also, that's an inversion if the price did that, which happened right here. So now I'm going to move my stops to break even. Also, on top of it, this is an entry breakup structure. Internal high spin swept breakup structure inversion fair value gap price respectively fair value gap. That's where you enter that trade. So pretty much it. We got the third, third or fourth, probably fourth breakup structure. Same move. So done by 12:30. One is a three hit. That's an amazing risk reward. Amazing plan. So I'm gonna break structure, break structure, break structure, break structure. Even if I actually didn't take a trade right here, I would have taken a trade right here. Had my stop loss still here because to get protected, so probably price can do this. So come back out. It's be part of internal soup, third soup model. So yeah, basically happens. So that would be my stop loss, even if I enter right here. So anyways, let's move on. Done for the day. Still haven't lost a trade this week. I actually didn't trade morning sessions, so don't know what happened really. So basically, price came out, sweep out the London low, and then started to worsen. So literally like that. You can actually do the analysis. So we have 15 value gap. We have a bigger structure. Asian low has been swept. Asian high is also been swept. Asian high is still protected. London high is still protected. So we got leaving London low inside of fair value gap, 15 minutes fair value gap. So yeah, that has to be in mind. So if I invest this fair value gap, probably I might wait for the price to market open and keep going up and sweeping out this low and then come back down. So that would be the sentiment. That would be the sentiment of this trading day. So that's it. Happened. Yeah, happened exactly what I said. So we sweep out the high, boom, boom. I like that inversion right there. So price also again respected that one with the gap, came back down. As I said, price inverse, sweep out that third candle low, and then price come back up, rebalance that inversion, and then come back down. So we didn't actually have any entry right here because we swept this, but we didn't sweep out this high in order for the price to go down. So let's see, sweep, 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 clean sweep. So we have a inversion right here, but that can be a risky entry, to be honest. So have that as stop loss, and then target would be this 15, maybe probably London. Yes, but yeah, that's my ideology, and that's what I'm gonna follow. So it's going to be two contracts, lose, I lose, I win. So let's see how this one plays out. Reason, as I said, price didn't actually have any momentum over there. And then, yeah, that's a stop loss. If I tilt mode, I might probably go in another shot right here. So I wait. eventually happen. But look at that. I don't know the reason why we got stopped off here. But we had this high and I wanted to one of the price to sweep it. Didn't actually sweep out the third candle low, which means price is gonna go up. So that's a live example right here. So look that up and then keep moving forward. So we don't have any entries right here. Maybe probably people climate stamping and we can nothing right here. Nothing right here. So anyways, let's move on to the next day. So I'm expecting the price to be bearish today. So because the reason we fell off and yeah, I'd be bullish because the reason because we fell off. And this is the first market structure shift on a higher time frame and also on top of it we invest high time frame fair value gaps, so which means the price most likely is gonna go up. Yeah, we also have 150 million bullish fair value gap up at the market structure shift. So we can expect the price to go a little higher after tapping into that zone. Pretty much no entries right here. Um, yeah, if I was looking at this market, would I be actually be trading this? I don't know. I would actually lost a lot of money if I would traded this market. So basically, I didn't do anything after that. So that's it. Out of here. Adios.